Hello and welcome to another episode of Market Roundup. My name is Fasindu Pereira. With us in the studio today, the Chief Executive Officer of Colombo Stock Exchange, Mr. Rajiva Bandaranayake. Welcome to the show, Rajiva.
Hello.
In terms of the valuations of Colombo Stock Exchange, we have seen the market has been quite attractive compared to the frontier markets. But if we look at the participation in terms of the local institutional, high net worth, and retail investors are pretty much low. In this particular context, how do you see the Colombo market today?
Yeah, Pasindu, actually, yes, the market is at attractive valuations, and I think particularly in comparison to our regional peers. Yeah. So I think this is a good opportunity for investors to accumulate fundamentally strong stock. And I believe that investors are selectively doing this as we speak. So we have seen the stock accumulation taking place. So it has provided opportunity for investors. Now the second part of your question as regards the situation as of now, the market has been very inactive for the last 2 years. We have seen negative growth in indices, about 5% in 2015 and about 9% in 2016. And we have seen reduced volumes, the reduced number of trades, and the lack of participation by investors in the market, lack of enthusiasm on the part of broadly all segments of investors in the market. That is the issue that we are faced with today. I think there are a number of reasons for this. Primarily, we have seen among foreign investors a shift of funds away from Asia back into the US, and I think we have seen that reflected in Colombo as well. Secondly, the high interest rates has had a direct impact on the equity market. We have seen a shift of funds from equity to fixed income. Then we have again seen, I think, funds moving away from the equity market to the real estate, because there have been apartment boom, and we have seen a lot of them getting into real estate. There again, so all those combination of factors, I think, have impacted on the equity market being fairly dull and of less activity at the moment, and that's where we are currently.
Actually, Rajiva, now if you look at the stock market, which is a barometer in our economy, but if we look at the Sri Lanka stock market today, market cap to GDP ratio stand at below 30%. So what steps can be taken for us to grow the market and to go into the next stage of the market?
Yeah, I think, Pasindu, it is relative to the growth of the economy. Now, if you look at our market, our market cap to GDP ratio is about 24%, even less than 30, much less than 30.
Correct.
But if you look at our regional peers, some of the regional markets, I think the reason why they are thriving is that there is better economic growth in this country. They have gone through a process of better economic growth in those countries, and companies have reached out to capital markets to fund their growth. Now, what is happening in Sri Lanka is that companies are funding their growth from internally generated funds, from their profits. So I think at the time there is a push for investment within the country. Companies will realize, both the state sector and the private sector, that whatever is generated from within the company is not adequate. That's the time they will reach capital markets, because they'll want larger funding. And I think that's the time the capital markets will really start growing. And then we can see better ratios of market size, liquidity improving. So I think it's a matter of time before we reach that.
That means, Rajiv, that in line with the economic growth prospects, only the capital market become
I would think so. It has to go in tandem with the market. Of course, the market, the economy is underrepresented as of now in the stock market.
So that means that we cannot exactly say that would be a barometer.
It's really not, but it's, I think, more a reflection of the sentiment of investors. It very accurately represents the sentiment and the confidence of investors rather than the actual representation. But I think on the flip side, there's vast potential, because most of these companies are out there still not coming to the market. So if you look at the future potential, there is a lot of room for growth in Sri Lanka.
Very interesting. And if you look at the plans for 2017 from Colombo Stock Exchange point of view, what are your plans, Rajiva? I heard exciting stories, demutualizing the stock exchange, introducing a SME board, or delivery versus payment systems. What is your take?
Actually, notwithstanding the current situation, we are proceeding with our development plans, because we need to grow the market, we need to keep investing in technology, systems and processes. One of the fundamental things that we're trying to do is to introduce a concept of delivery versus payment. Right now, Pasindhu, as you know, in the market, there is a certain element of risk where settlement is concerned. So when you buy shares today, your shares immediately move from the seller's account to the buyer's account. So as a buyer, you are at advantage, you get shares without paying for it. But as a seller, I lose custody of my shares and I get paid 3 days later. So I run a 3-day risk. So that's an anomaly in our market. We have been having it for 30 years. We have never had settlement failures, but that's not the right thing to do. In terms of risk, it makes investors, particularly foreign investors, not very comfortable. So we need to move to a system where shares are delivered on payment, delivery versus payment. So you exchange shares and money at the same time. That's the ideal situation, and that is something we are looking to introduce during the course of this year. A lot of work already has been done. We have actually got the broker systems already in place to be DVP compliant. And now during the course of this year, we are trying to get the stock exchange systems in place to facilitate this DVP. Apart from that, you mentioned demutualization. Yes, demutualization is a process of converting the stock exchange from a guarantee company to a company limited by shares. Now, the fundamental reason why you would do that is to separate trading rights from ownership. So right now, there is a thought that brokers have undue influence over the exchange. And what demutualizers will bring is that it'll separate these membership rights from their ownership rights.
So what is your tentative time frame for that thing?
There again, the SEC Act has to be amended, and I believe they're doing it now. And then once it's submitted to Parliament and passed, it'll become law. And then within a period of 1 year, we have to demutualize. So that's the process for demutualization.
That means from a market development point of view, that would be a good year, 2017.
Yeah, in terms of development, those initiatives will happen. And further to that, we also want to introduce alternate market segment, which will consist of a SME board for SME companies, so providing opportunity for the smaller and the medium-sized companies to also reach capital markets and for funding purposes. And we are also having plans of opening up a board for dollar-denominated securities.
Very exciting.
So companies that are based, for example, in Maldives, etc., can come and dual list. So they will get a primary listing in their exchange and take a dual listing in our exchange and issue securities in US dollars. So that it will be open for foreigners to buy and sell. Already we have done quite a bit of work on that. And we have already had a couple of companies interested in dual listing. So we are hopeful that within the first half of next year, that we can at least list the first company, and we are working with the regulator right now to get the necessary.
Very interesting, and that means our market cap to GDP may have a good direction, I would say.
Yeah, it will have a positive impact. And another further development that we'll see during the course of this year, hopefully, is the new SEC Act. That's a piece of new legislation that is coming in, which will bring a lot of changes to the regulatory framework of the regulator. It will strengthen the regulator and enable them to more effectively regulate the market. For example, right now they can only go for criminal sanctions, but under the new SEC Act, it will allow them to go for civil sanctions as well. So it will strengthen their hands. So there are some changes that are coming through the SEC Act as well.
Very interesting. Rajiv, if I move on to the other side of the story, I think we have two major challenges. Number one would be the market as a whole, small in size, and the next one would be the lower liquidity. So I think those are critical challenges where we need to improve ourselves. In that context, what additional steps need to be taken into account in order to address these issues?
Yeah, size has been a long-standing problem for us, and I think to address that, we need to get the state-owned enterprises, the larger companies into the market. We also need to get the larger private companies also into the market to increase our size. So on one hand, we are engaging the government on the listing of SOEs. The government has in principle told us that the non-strategic state-owned enterprises will be listed during the course of this year. So we are hopeful we'll get at least a couple of them into the market that will bring the size and volume that we require. And I think, Pasindu, with the valuations improving,
Yeah.
you will see the private sector companies also coming in. So we are continuously engaging the investment banks
Okay.
and the larger private sector companies and trying to encourage them to come into the market and use the capital market mechanism as well.
Right.
The other issue is the liquidity, the low liquidity.
Yeah.
Again, in all emerging markets, this is a issue.
Common problem.
And the regulator came up with a minimum public float rule, for example, to try to force companies to maintain a minimum public float. I would say it has met with partial success. We have seen companies divesting and complying with this requirement. Some of the companies have been unable to comply.
Yeah.
Some of them, very few of them opted to delist, which is not the right thing to do. But some of them have gone down to the Reserve Board.
Yeah.
So there are various degrees of compliance, but broadly I think it has impacted favorably because we have seen a little more liquidity coming in as a result of this public float.
Right.
So those are broadly the measures, regulatory measures, as well as the marketing measures that we are trying to take to increase the size and liquidity in the market.
Right. You came up with a good point, listing SOEs. I think 15 to 20% stake of listing of these SOEs. I think that would be a timely requirement. But do you think the enough awareness been created among the public, because public perceive this as a privatization, right? So in this context, do you think additional steps need to be put in place for us to create the awareness among the public and get the public the interest and create their interest and to move forward with this initiative?
Yes, I think Pasindu, a very important point where we do a lot of education. There are a lot of misinformation that has gone. As you quite rightly said, it is not privatization.
Yes.
But the perception among the general public is that a state asset is being sold. It is not so at all. We are only asking for 15, 20, 25% of a state entity to be listed, to be shared with the public of the country. So the government is retaining a majority control, and we have seen examples of this before in the market. For example, look at People's Leasing Company. Nobody makes any fuss about it, but that's a very successful model of how a state-owned entity has been brought to the market.
Correct.
70% perhaps owned by the government, 30% out there in the market. One of the market leaders competing very effectively with the private sector. And it's a perfect model of how a state-owned enterprise has been listed. If you go back to privatization itself totally, SLT is a good example how a very successful privatization took place and how the company rallied around and benefited from this initiative. So I think it's a combination of factors. It has been a political story more or less, this fact of state-owned enterprises being listed. But I think all of us need to go out there and start talking to the public, the politicians, and educating them that the benefits of these state-owned enterprises coming into the market in terms of bringing more transparency that they are talking about into the companies. The companies are going to be more accountable. They are going to be having access to a large pool of investors to fund their capital requirements. And also, even if you look at the staff with ESOP plans, etc., the staff will benefit because they'll be owners of that company as well. And the win-win for all that is that ultimately the state is still holding a majority stake in that, maybe 70% or 80%. So it's a win-win for all. And there are no negatives in that, there are only positives in that. But I think, as you quite rightly said, we need to really go out there and talk about it and educate broadly the community of what this state-owned enterprises coming into the capital market really would mean for the company as well as for the country.
Actually, as you said, this is the time for us to change our mindset in terms of the growth and the development prospects. So thank you very much, Rajiv, for being with us and share your valuable experience with us. Thank you very much to all our viewers.